Hey guys, welcome back to another video. The Maestro speaks here. How you guys doing out there? Yeah, I just wanted to give you another, just a little analysis off of this pair, the EURZAR monthly time frame. Okay, now this particular pair has been trending upward for a very, 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 very long time, as you can see. Like one of my friends would say, even Stevie Wonder could see that. Even blind Bartimaeus could see that. Anybody could see that this market has been trending upward for a very, very, very long time. All right. And it's still trending upward, even though there has been downward moves, shorts, shorts, shorts in the market. Shorting meaning it's selling. The sellers dominate for a while. And we talk about for months. For months, sellers have dominated within this upward trending market because what happens is a lot of times when persons trade the market, they would go from one area to another area and they wait to see what price does when it reaches uh, certain areas of interest in the market. All right, you see what I'm saying? So you see what I just do there? This is a channel. This right here is like a channel. This is an upward ascending channel, an upward channel in the market. You see, I got two trend lines, one at the bottom, one at the top. These are support and resistance. Sorry, support and resistance uh, trend lines. All right, but this is a channel, and the market. Then basically price was moving from the area of resistance to the area of support and making its move, going back up to the area of resistance, going back down to support. That's all this market been doing. And we talking about this market been doing this for quite some time. Okay, so even when I zoom out a little, see from 2004, it has been moving up. But then right here is where the channel actually really took shape. And you can see it has been respecting. See, it tried multiple times to push above this trend line, and it was successful. It broke back down, and it kept doing that. So whenever you see the market struggling to break a particular area, you could kind of anticipate the market moving the other way. Because then when sellers see the struggle, or when sellers see the area of interest that they're interested in, what they do, they get in and they dominate. So then you have the wrestling match between the buyers and the sellers. After a bullish move, the sellers are now, they get in, they be like, okay, we're gonna take over this market because why? It's at a critical key area as relates to this upward channel, this upswing in the market. And see, they dominated for months, back down to the area of support. Then the buyers step in and say, oh, okay, we're gonna take over. Then you got up. The seller say nope. The buyer say yes. Seller say no. Consolidation a little bit. Then you got this bullish engulfing candle right at that particular area, and they carry the market all the way up there. And then you have this double top right up there, and then you have this bearish engulfing candle at that area of resistance that's strong, respecting this upward channel, the trend line itself, and it drops all the way back down again to support. And then you got the bullish engulfing confirmation right here. Now if you're trading off of the monthly time frame, and if you had seen this move happen, the same candle right there, this I would call it's a pin bar or hammer. I always get it confused. But this is you said a long candle wick that was selling pressure. This is where the sellers had the market. But then the buyers got in and say, we ain't done yet. And they bring the market right there. So that would have signified you can get in. And so you should have gotten in right in this area if you're trading off of this high time frame right here. And then what you do, you put your stop loss beneath the last swing low, which would be here. You put your stop loss beneath here. Give it a little wiggle room. All right. Yeah, you can put your stop loss right there. And then you just ride the market up, maybe all the way back up here, or you take out your Fibonacci. You take out your Fibonacci, you go from your swing high to your swing low, and then you got this golden area here, and you just wait to see what price will do when it hits this zone, because the price might do something. Because then what happens is that the market gets exhausted when the buyers dominate for so long. Then the sellers might just take over and just take the market all the way down for months, even years, because this is years of upward movement on behalf of the bulls. The bulls have definitely dominated this pair. All right. Yeah, sellers get in there a little bit, but the bulls are in charge. All right. But it comes a time when the bulls will get tired because the bulls start to worry. This is too good to be true. You in the market for so long and you've been making money for so long, and you be like, wow, this is awesome. You believe it's too good to be true. And then the market, and then the sellers step in and say, yes, it's too good to be true. And they might step in right here, or the market can go all the way back, all the way back. Hold on, let me take this a little higher. See, it might respect this trend line and go and bounce all the way up here, and go and then come all the way back down and respect this and continue this back and forth between the two trend lines within the channel, or it can very well get right here, because a lot of sellers, I want you to believe what I'm telling you, a lot of sellers are watching. Thank you. A lot of sellers are watching this area right here. Don't get it twisted. I am telling you what I know. A lot of sellers, we're talking about the banks, the hedge fund managers, they like to trade within familiar areas, and and they just and they have a way of trading, and they normally trade off the higher time frame. So I'm telling you, while you as a retail trader scaling down to the hour and the 15 minute and the 5 minute, and ain't nothing wrong with that, but they trade off of the higher time frame because you can trust the market more so when it's actually moving on the higher time frame, because these are months. Every candle is a month collection of data. So you can't go wrong. Well, you could go wrong because the market could do anything, but there's a more stronger confirmation in movement, in price movement, when the market gives you a confirmation on a Monday time frame. Look at what happened here. Like I tell you, the double top happened right here. Right here, and the market respected that, and the sellers dominated for months. We talking one, two, three, four, little bullish something there, five, six. The sellers dominated for about 8 months. Eight 8 months. So you were supposed to be selling, 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 waiting for pullbacks off of the lower time frame, like the daily, like the 4 hour and stuff like that. You see where I'm coming from? Because trust me, this is how it's done. All right. Because monthly time frame trades, they don't come often. But boy, when you get a opportunity off the monthly time frame, ooh, especially if the pair is a trending pair. But see, the patience factor have to kick in. A lot of persons don't have the patience to wait months, maybe even, shoes, maybe even a year for one trade. You see what I'm saying? That's why we scale down to the lower time frame. But all of that being said, this market is potentially going up. All right, potentially going up. I see the market going up. I'm gonna watch this area here. Okay, so that's my analysis. Now, if you was trading this, you should have already gotten in, and you should have just been holding. I would say hold, 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 hold until the market gives you a reason not to hold anymore. All right. So that's it. You guys have a wonderful day. And feel free to comment and subscribe. All right. And also give me a like, man. I'd appreciate that. Good for the algorithm of YouTube. You guys have a great day and a great trading week. Take care.